So we talked a bit about time,
Yeah.
and how we can get into trading relatively quickly versus property. Property is such a long game.
It's a very long game. Even in terms of ROI and profitability, though, property is a long-term game. I think sometimes people think they're going to buy a property and they're suddenly going to be financially free. It's not the case. I mean, even if you just look at buy-to-let, the majority of my portfolio is buy-to-let, thankfully not all of it. And that's because that's where I started. That's what I was taught to start with. And it's not bad. You learn a lot of lessons by going down the buy-to-let route, but you're lucky if you're making £200 a month cash flow off of a buy-to-let. Cash flow meaning profit, in case people don't know.
But then if something happens, if the roof happens or the boiler or something like that.
Yeah, so over Christmas, well, just after Christmas in the new year, one of my properties, the boiler broke in my buy-to-let. The cost of fixing that one thing in that one property wiped out a year's worth of profit because it's a buy-to-let.
Painful.
So explain to me where I'm making my money in property when that's actually the numbers and the reality of what it's like.
Capital appreciation?
Not in my area. Yeah, well, not in that particular area with that property. So not a lot of capital appreciation yet. But if you, as you know, with buy-to-lets, if you go to a good capital growth area, you sacrifice cash flow generally. So you're then not making your money on a monthly basis, but you might be making your money in the long term. And even if you're making your money in the long term, is it really keeping up with inflation, or is it just a little bit behind? You're probably not going to be beating inflation, especially when inflation is 10%. There's definitely better ways to make your money, as we know.
Yeah. And in terms of percentage return, you know, even looking at the general stock market, if you went for index funds, you might make 8 to 10% a year. Property, a good year would be 8 to 10% again. Trading,
you could do 8 to 10% on a monthly basis.
That's insane.
Yeah, and it is a monthly basis. I mean, I don't tend to like talking about things in this way, but our students make between 5% and 10% once they're competent and they're up to skill set with all of our strategies, 5 to 10% per month. At the lower end of that, at just 6%, you are doubling your account every single year. And the reason I don't like talking about it is I don't like advertising get rich quick, and it's not get rich quick like we've talked about even on the previous episode. You have to learn the skill set to make that a reality. So money does grow on trees if you know where to plant, you know how to water, you know how to prune the tree, then it does grow on trees, and that's what trading allows you to do. So yes, the ROI potential, and if anybody's an investor, what they should be looking at is ROI, then trading way outstrips property from that perspective. It really, really does.
And I'm just thinking of time in the day we spend on it.
Yeah.
So with my property business, I've built it, I've got a team, it's systemized, it's amazing, it's running, I'm able to do refurbs and like other projects. However, you get issues, and I was telling you about a beautiful Friday afternoon I had in London before the theatre. And I took myself to the National Gallery, and I put classical music on. I had Einaudi. I was looking at some of the best artwork in the world, and my phone was pinging with these tenants who had a lighting issue, and the contractor was trying to get in, but then they didn't want to give access, but they really wanted it to go quickly. And then I've got the agent talking to the contractor, and it's just all happening, and I'm like, I'm trying to have a nice time.
Yeah.
But this business is giving me that opportunity, you know. I need to be grateful for that. So I didn't really mind because it's part of my job.
Yeah.
But then trading, we don't really deal with people, right?
No.
We just sit down for half an hour a day and do our work there.
Unless you're a madman and decide to set up a company teaching other people how to trade.
Yeah.
And then you do have to deal with people. But thankfully, we've got a very good group of people. We're all lovely.
Yeah.
But yeah, I think one of the things you've been saying there, and it's kind of sparked a thought in my brain, is we can choose the way in which we make money, and we can choose ways which are low time commitment and high return but still require learning, like trading, or we can choose to do something like property, which is lower return. People think is safer. I disagree, but people think it's safer, but requires a lot more of our time. Now, if you love the whole process of doing property, then you probably don't mind that and you're happy doing that. And if you do something which is lower pay but you love it, it's still totally worth doing. I personally do not love the process of investing in property. I hate dealing with letting agents, hate dealing with estate agents, hate dealing with solicitors. My goodness, solicitors are the bane of my life. Don't like dealing with tradespeople when it comes to properties that I'm managing. I just don't enjoy it. So if you don't enjoy the process, why would you do that just for the sake of making money? Whereas the reason I'm partly so passionate about teaching trading to other people is because even if you're not passionate about it, it's only taking you 30 minutes a day.
Mm-hmm.
And guess what? You've then got the time to do the things you are passionate about. And that's why I love it.
Yeah. Why is property not safe in your opinion?
I get questions on this all the time, but it is definitely my opinion that it's not safer. First of all, if anybody hasn't listened to the podcast episode we did on what not to do when you're trading, highly recommend listening to that, because we talk about some of the reasons why trading is very low risk and it's a really safe way to invest. But ultimately, when we trade, we are only risking on each trade that we place a maximum of 1% of our entire account. So when you're only risking a maximum of 1% of your entire account, that's £100 of £10,000. If you had £100,000 in your trading account, like some of our students do, then you're risking £1,000 per trade, but it's still only 1%. Whereas when I take capital, my own capital, which I've generated through trading, or I'm using investor finance from friends and family, or I'm borrowing money from the bank to invest in a property, all of that money has to go into the property. That's 100% of that capital is in the property. Now, is it likely that that property is going to go to zero value? Of course, it's incredibly unlikely. But is it possible that something goes wrong on the build, we discover something during the build process which costs us more money? Yes, it does. So have I got more than 1% at risk of my entire capital that I'm using for that deal? Yes, I really do. So you have to be very, very careful with property investment that you're not putting yourself in a very risky position. But all investment carries risk. And for me, actually, the number of things that can go wrong with a property deal, from my own experience and the experience of everybody I talk to in property, the number of things that can go wrong and the cost attributed to those things going wrong makes it far higher risk than actually investing in trading, where you are capping, regardless of what happens, your risk to 1%.
You make good points, Lewis.
Thank you very much. Yeah.
So are you never going to invest in property again? Are you going to try and reduce your assets in property? Are you going to be clever about it and spread the risk a little bit between trading and property?
Yeah, I mean, I'm already spread because I do obviously still trade and I still do invest in property. The past 12 months, my property strategy has primarily been risk mitigation. So paying off mortgages and things like that, especially with the way that interest rates have been, everyone knows have been crazy. Interest rates are looking to change now, so I'm changing my strategy a little bit, and I'm looking to purchase again. So I still believe in property, but property is a long-term play. It's not a short-term gain. And I think often people want to go into property because they have it glamorized by social media. They think it's going to be nice and easy. I'll buy a nice looking property and I'll tenant it out and everything will be hunky-dory. They don't actually think about all the hidden costs that come with owning a property and dealing with difficult tenants who make life hard work sometimes. So I still believe in property for the long term. So I will always filter some of my trading profits into property. And the strategy I'm using going forward will be different to the strategy I've used in previous years, just because it's better cash flow than buy to let.
Wonderful. Okay. Well, I look forward to seeing how it all goes.
Yeah.
And if you've got opinions on trading versus property, let us know.